Hello and good morning. Welcome to Groundswell. Uh, Thank you very much for joining us this morning. My name is Matthew Agarwala. I'm an economist at the University of Cambridge, where I work on natural capital and environmental economics. I'm delighted to be here at Groundswell. I've attended several times in the past. I think that having me as chair is the Cherries' kind way of saying they want an economist present, but they don't want to hear from me. So to prevent that from happening, we have a brilliant panel for you this morning with a couple of farmers, tech entrepreneurs, and members of the civil service from DEFRA. So the discussion today is going to be around natural capital, carbon markets, and where we think the agricultural system is going to move and how farmers are going to engage with this. We have Jimmy Goodley. Jimmy, can I have a wave? Jimmy is a North Norfolk farmer. He's farmed for 12 years, a convert to regenerative agriculture, but not quite a convert to carbon markets yet.
Not yet.
Not yet. Next to Jimmy, we have Rueben Saxon, CEO and co-founder of Sword. Sword is a tech platform that enables farmers to measure, develop, and sell their market-leading natural capital assets. We have Janet Hughes, DEFRA's very own program director for the Future Farming and Countryside program at DEFRA. She doesn't really need an introduction, but in case anybody's not aware, that is the portfolio that is responsible for transforming the way we support and regulate farming and the countryside in England. And last but not least, we have Fergus Lyon, Professor Fergus Lyon, who is farmer, professor, business expert, specializing in sustainable business. His farm in Hertfordshire is the UK's first B Corp farm. So, the way this is going to work, each speaker is going to comment for about 5 minutes on their views on these topics. Then the speakers are going to have a chance to rebut to each other, and then we'll have Q&A. So I'd like to start, if that's okay, with you, Jimmy. You're a convert to regenerative agriculture, but not yet carbon markets. Why?
Thank you, Matthew. The panel of academics, I slightly suspect that I'm the voice of ignorance on this panel. So really what has prohibited me from selling my carbon is effectively sort of three key points. My first one is I'm still unclear what the point of carbon trading is. So theoretically, a part of the reason why we went down the regenerative route was to combat climate change. And if you look at the original cap and trade clauses that were done under Bush Senior in the States, there was a lot of carrot and stick. It seems to me that the carbon offset is a lot of carrot and not a lot of stick. That you're slightly relying on corporations to do the right thing. And I also think it does facilitate a certain amount of greenwashing. So for me, I hope that when my carbon is sold, it genuinely is being sold to offset somebody else's necessary carbon, whether that's a mining company, whether that's a steel company, but I feel that's probably slightly in the government's remit. The second thing is I'm a slight skeptic of selling at the very start of a market. At the moment, carbon feels a little cheap. And certainly, once you've been regenerative and zero-till farming, the carbon does suddenly become quite an important asset. And I'm desperately keen not to sell that undervalued. With so many other commodities, actually, the guys producing it are not the ones generating the money. The guys who are trading it are making the money. And I think sort of integrally with farmers, there's that cynicism of being farmed rather than farming. And the final point I just wanted to make was, how is it measured? So there is a real issue on, yes, it's a percentage of soil organic matter, but, is it being probed? There are schemes I've been offered, 5-year schemes, where effectively if I tick all the right boxes, I get a 5-year deal on my carbon. Now, as we all know, technology moves on. Rueben will talk about how technology is moving on. I'm scared to death. Any farmer that's oversold wheat and ends up having contracts being bought in against him knows the danger. And my worry is if I sell 500 tons of carbon that I think I have sequestered, and the technology for scanning moves on, and Bill Gates, who's bought my 500 tons of carbon, turns up on my farm with his new racy probe and says, the bad news for you is you've only sequestered 400 tons of carbon. Now you're going to be offsetting 100 tons of that. And every time I have been bought against on a wheat contract, the wheat price has been significantly higher than what I sold it for to start with. So that's sort of, my little sort of concerns.
Right. So, I mean, these are genuine concerns. I suspect you're probably not the only one in the room or tent
I hope not.
that has shared some of these concerns. One of the things I research as well is bubbles, asset bubbles, financial bubbles. And there are three things that we know are sort of stylized facts about financial bubbles. They coincide with an increase in trading volume. So lots of people are buying and selling the stuff. They coincide, the deflation, the crash, tends to coincide with an increase in the supply of the asset. So you start selling a lot more of the stuff, and then you get the crash. And that bubbles tend to occur in periods of financial or technological innovation. And so these are some of the concerns that we have to worry about around carbon markets. But what we have here is a tech entrepreneur who is at the leading edge of real-world natural capital markets and has real-world experience in the opportunities, the safeguards, and what farmers need to look out for. So Rueben.
Great. Thanks, Matthew. So I think the first thing I would say about whether or not you would want to participate in natural capital or carbon markets is that you kind of might already be doing that without knowing necessarily. Carbon markets and natural capital markets are upon us. So whether you're choosing to work with a carbon farming scheme and to sell your carbon as offsets or even insets down the supply chain to Tesco's or Morrison's, or which is more likely at the moment, you feel that you are committed to a net zero scheme over a period of time, you are in effect in both instances trading carbon. It might just be that in the second instance, you're being paid significantly less for it, and you're being asked actually to bear the cost of getting to net zero by a partner, and their interest is to pass the carbon benefit onto a consumer their side. So the question I think is not if, but it is how farmers are best positioned, how their interests are protected as they step into carbon markets. And actually, I point out another risk here, which is if we don't build ways of farmers taking control of their own natural capital assets so that they can sell those assets or do what they want with those assets, commodities rather, alongside food production, I think there's a risk that the terms of those commodities are set for them by other actors, whether that's government or other private sector actors. So I really do think it's a really huge opportunity, but also kind of an imperative in a moment in time for farmers to take control of, frankly, what is theirs and what they continue to produce through their stewardship. And then I think there are kind of three really important things that have to happen for this to work out really well for farmers. The first is to Jim's questions, and I'm not probably going to be able to get to them all in this moment, but hope to answer some of them in the next section. So the first part is we have to get this right on the ground. You have to be dealing with really serious, careful actors who are doing real baselining and are providing you with contracts which protect you from the kinds of things that Jim was talking about, so that if markets are not satisfied, for example, that you have produced the carbon that has been sold, that you as a farmer are protected from the consequences of that. So there are lots of things, and I can talk more about them in a second, that you need to look out for if you're working with carbon farming a partner. So getting it right on the ground is the first thing. The second thing is government's engagement, right? And actually, I've been really heartened by DEFRA's work so far. I think it's incredibly ambitious, and it's ambitious in these ways, and I think they need to continue on this track. My 2 pennies. Allow innovation to happen in the first instance, right? Do not try and regulate too quickly before you really know what the shape of the market could be. Then regulate, and regulate really well. Regulate in such a way that you exclude bad actors from the market, and I think that there are bad actors in play at the moment. And the third thing is engage the private sector in the right way. And I think the Stacking Payments Initiative is a really useful way of doing that, provided that the Stacking Payments Initiative also allows for this notion of additionality. That is to say that capital streams can flow into farmers' pockets and people can get the natural capital commodities that they indeed are paying for. And then the third and final thing, and I'm going to shut up pretty soon, is private sector actors have to be honest to build trust in the market as well. What does that mean? It means that if you're an offset buyer, you've got to be a good one. You have to be accountable. You have to do carbon accounting correctly. That carbon accounting has to be public. 2, you have to respect farmers' rights over their own natural capital assets. So if you're trying to pull a quick one and asking them to do something and asking farmers to cover the cost of a transition, I don't think that is good acting. And then the third thing is obvious, which is to work with and via government, right? So they have to engage in the market that government ultimately are responsible for building as we transition. And then the final thing I'll say is, that this is coming from outside of agriculture. It seems to me that this is a massive moment and an opportunity for farmers to play a new role inside an ag ecosystem. And I really do believe, honestly, and that's why I started this business, that natural capital is at the fulcrum of that new role. Thanks.
Thank you. I mean, as someone who's worked on natural capital economics as an academic for over 10 years, it is so exciting to hear from people who are at the forefront. Thank you. I think it flows naturally now to Janet to speak about government's role in ensuring that these markets are well regulated and operate fairly.
Thanks, and it's brilliant to be back at Groundswell again on such a gorgeous day. Thanks very much, everybody, for coming along. So I'm Janet. I'm the Director of Farming Reforms in DEFRA, and the reforms that we're doing, in case you're not aware already, are that we're phasing out everything to do with the Common Agricultural Policy in England, all of the schemes and subsidies of that era, and we're bringing in a new era where we get behind farmers rather than getting in their way, and we support farmers to produce food, which is, of course, the most important thing that any farmer is doing on any given day, and also alongside that, take care of the natural environment, sequester carbon, actually help us adapt to climate change, help us improve biodiversity, water quality, air quality, and also improve animal health and welfare. And we believe that, as many farmers here at Groundswell will already know, that these things need to go hand in hand. Food production and taking care of the natural environment are two sides of the same coin in the long term. If you want food security in the long term, you have to take care of the environment. And regenerative farmers, of course, know that all too well. And that's why I say we've got to get behind you rather than getting in your way. And the first thing that we're going to do to achieve that is to change the way that government works with farmers. So we want to have a relationship with farmers based on mutual respect and trust, not on mistrust and suspicion. And we know that we've done quite a lot to earn suspicion and mistrust over the last few decades. And now we are setting about trying to earn your trust and confidence by showing you some respect, getting behind what you're trying to do, recognizing that you're the ones who know your land best. But we want you to see us as people who are a bit like your vet or a trusted agronomist or other advisor who we know what we're talking about. We're here to help you succeed. We want you to succeed. And our job is to help you to do that. And that's how we want to operate with you. And if we don't do that, nothing else that I'm going to talk about is going to work. Beyond that, we're phasing out basic payments, as I'm sure you know, and we're going to instead invest the money. And the money is going back into the sector through grants and ongoing payments. The grants are to help the sort of capital investment that you need to make if you want to make your farm more efficient, if you want to put in place new habitats or environmental features, or if you want to improve animal health and welfare, or if you want to innovate on your farm, as many farmers here at Groundswell will be doing. So we've got a whole range of grants that are going to be on offer over the next few years, and I encourage you to look those up. What we're going to do is stop calling them each a different name and offer them all through one service so that you can search for what you want in language that you would actually use in one place and not have to learn the rules of lots and lots of different schemes. So that's going to take us a while, but that's where we're headed to make it much easier for you to access money. And we're also headed towards, instead of having a very short window for this grant and a very short window for that grant, much more of an ongoing kind of an offer. And then we're going to offer ongoing payments, and this is where natural capital comes in. So we offer ongoing payments now through stewardship schemes, which many of you will already be involved in. What we're now putting in place is a range of new schemes which will succeed countryside and environmental stewardship. And they will pay farmers to take care of nature alongside farming. And we'll have the sustainable farming incentive, which is mainly about land sharing type activities. All the things you'll be doing already if you're a regenerative farmer. So integrated pest management, nutrient management, taking care of your soil. The soil part of this will be open as from the end of next week, so you'll be able to take part in that. But we'll also be paying for sparing type activities for less productive areas of your farm, or creating or looking after habitats. And we are also paying for much longer term, larger scale landscape restoration type projects. And the way that private finance plays into each of those is quite different. So for sustainable farming, what we don't want to do is crowd out the sort of innovation and development of private markets that we've just been talking about. And that's because we've got some huge ambitions to reduce carbon and other emissions in this country, improve biodiversity, and that's not going to be government paying for that on our own. That's not going to be affordable. We need the private sector to be bringing in investment, and we've got some really punchy targets to bring in private investment so that you farmers can get paid by government to do some of the things that you're doing, and you can get paid by the private sector to do others. And that already exists in some places. You can get paid by a water company if you're in a sensitive catchment to do things alongside a government scheme. And what we've said in the new sustainable farming incentive scheme is that you can be in both. We don't care. You can be in sustainable farming incentive and also a private scheme. That's just fine. But we have said we'll have to keep this under review, because what we can't do is pay you for something that you're already being paid for by somebody else, and nobody in the market wants to do that either. So we've got to find a way for public investment and private investment to live alongside each other in a way that allows you to have a varied portfolio of income from your food or whatever other agricultural produce you produce, and also your public goods and your natural capital. We want them to live alongside each other in a way that is straightforward for you to operate, gives you lots of choice and flexibility, and gets us the outcomes we want. And we have to feel our way a bit with this, because the market is fairly new, as we've been discussing, and we don't want to make loads of rules now that crowd it out or that actually turn out not to be the right ones. The other things that that's the sustainable farming incentive and local nature recovery. At the other end of the spectrum, when we're talking about long-term, large-scale projects, we're looking at blended finance. And so we're asking people who are getting government funding for long-term projects to also look for private funding of one sort or another. And during the early stages of developing those projects, we'll help those people to find that funding. So we see private and public funding going absolutely hand in hand, and you being able to choose who do you want to get paid by for the different goods that you produce, whether that's carbon, runoff prevention if you're in a catchment, or whatever. The other aspects in terms of government's role here, so it's tempting for government to go, there's a thing, so let us control it. And we don't have a great history of succeeding when we try and do that with markets. But we do tend to convince ourselves that we can in the civil service. And we don't want to do that, and we don't want to jump in too early, as Rueben said. Where we think our role is in helping to set standards so that everybody can understand what standards are being measured against and trust those standards. And there are standards already, and we're contributing to the further development of those. To make sure that there is proper measurement that can be trusted, that there is additionality, and that there's permanence as well, because there's no point paying for carbon to be sequestered if it's just going to be released again a year later. It needs to be ongoing sequestration. So setting standards, setting some of the rules of the game, but again, we don't want to jump in too quickly, but we also don't want to go too slowly, because we know that lots of farmers are nervous about this, exactly as Jimmy said, because it's not clear what the rules of the game are, and it's not clear what protection there is for farmers entering into these schemes. And it's a bit sort of, it's complicated, it's not clear who you can trust at the moment, and we think we do have a role in that. Beyond that, we think it's for you you and the market to work out what's the right sort of pricing, what's the right way for these things to be traded. So I'll be really interested if you've got any questions or feedback about where else you think government should be acting, but we think our role is paying you to do the stuff that we want to see, making sure we don't crowd out private investment through the design of our schemes, helping set standards and helping set the rules of the game. And by doing all of that, what we want to support is farmers collectively delivering some of the outcomes that only farmers can deliver. So obviously you grow our food, and that's critical, but only you can improve biodiversity in the countryside. Only you can sort out water pollution in the countryside. Only you can sort out agricultural emissions, and we want to help you to do that alongside food production.
Wonderful. Thank you very much. I'm sure there will be many questions coming back for you, Janet. And last but not least, Fergus, you're a farmer. You've been actively engaged in natural capital markets, both with carbon and with water already. So I'm wondering perhaps you could share your experiences for those interested here.
Thank you very much. Yes, I'm going to talk particularly from a viewpoint as a farmer, a farm just over the horizon over there. We're a mixed farm with arable, beef and woodland. But I'm also, my other job is as an academic, and we're doing research with looking at natural capital markets, funded with the Food, Farming and Countryside Commission and the Prince's Countryside Fund as well. The work that we've been doing at East Hall Farm is a lot of it in terms of the natural capital markets is underpinned by the stewardship approach, and we've been heavily involved in that for the last over 20 years now. and just going into a big new program as well, where we've been replacing some of our break crops with stewardship options as well. So doing on quite a large scale, creating corridors across the farm, but at a whole block level of a number of fields at one time. And so I'm quite glad to not be growing oilseed rape, and we're looking at the margins of that as well, and having not only the financial benefits, but also the wildlife benefits. But particularly I want to talk today is about the private sector natural capital markets that we've been looking at. And on the one hand, we're exploring, with a bit of skepticism as well, the whole area of the carbon markets. We're in conversations with a number of companies, but we're wanting to, on the one hand, make sure we are carbon neutral ourselves before we sell our carbon. And then secondly, we want to make sure who we're partnering with is also done everything they can do to reduce their carbon emissions as well. So we're quite skeptical that way, and so we want to build a relationship with people who share our values. We haven't gone down the woodland route. We've done small parts of woodland planting, but it just the scale and the bureaucracy required with getting payments for it didn't really stack up when we're doing small amounts each year, particularly where our policy is doing small amounts and creating small corridors as well. But that's, it's on a smaller scale. We're looking at the biodiversity offsets and net gain, and we're hopefully going to be doing work with there's a great crested newt habitat delivery project run by FWAG, so we hope to be part of that. Again, funding our wet areas and renovating ponds that we'll be doing. That might be starting in this next year. I'm more interested as well, we had a talk before about, I think Rueben mentioned about this idea of insetting, and I think that's something which is probably even more interesting because we already have relationships with the buyers of our crops and with our also with the banks who might be lending to us. So how can we help work with them with our natural capital? And we're doing that at the moment. We're one of the Jordan's farm partnership, where 40 farmers are committed to having at least 10 or 15% of their land in wildlife areas. We've got a lot more than that anyway. But this gives us a premium on the oats that we sell. We sell our we get a deal where we get, we used to be £15 above the wheat futures. It's now gone down to £10, but it's still a wheat future. So there's a benefit there. But as the wheat prices go up, the actual the yield hit we get of wheat compared to oats makes things financially a bit different, but it still fits into what our ethos is. And it's a very important community of other farmers as well that we like to be part of as well. In terms of one of the things we're looking at, and through the research I'm doing, is as well looking at the supply chains. And there is a movement now for big companies to report on their carbon and on their biodiversity impacts. And once that regulations come in, we will be finding that a lot of the banks will be requiring farmers maybe to report on their biodiversity impacts and on their carbon impacts. And so I think we've got to be aware of that this net zero supply chains will come to meet us as farmers. And the challenge there is, how can we make sure that we can get cheaper finance if we are doing things that are supportive of being positive for carbon or for biodiversity? The negative side is that this regulation might mean that either banks will feel, I don't want to touch agriculture because it's too complicated, or the extra costs of monitoring and recording will be passed on to the farmers just as a requirement, and we have all the costs and no benefits. And the final area of work we're doing is looking at the water companies, and I think this is something where it is, we're working with Affinity Water. We just got our auction results through, where we've got some cover crops that we're part of, and that's a nice way of paying us to do cover crops that we wouldn't be doing otherwise, adjusting our cropping a bit so that we can bring something that's good for water quality, but also we see a big benefit for the carbon benefit as well on that. So that comes on finally with a few challenges that we've got. One is the issue of, are these markets regulated? I think we've spoken a bit about that, and there might be more questions on it. Secondly, where the cost of the monitoring is what's the cost for farmers? And also, what's the approaches? What can be done that's appropriate for farming? There could be a gold standard, but also what's the ways of doing things very cost effectively? And there's some really interesting technology that might, coming out about how to measure things and how to measure biodiversity using technology and DNA in water supplies and things like that in stream water, that actually could be something that could help us in the future. A crucial issue is the additionality question, where we're only being paid for the additional carbon we're sequestering, which is quite right. But what does that mean about those of us who are maybe some of the first movers in regenerative agriculture, where we are quite rightly filling our soils up with carbon? We're going to reach a high equilibrium, maybe before the market has got going, and then the benefits of the carbon market will all go to those people who are doing all the things we don't want to be doing in our regenerative farming. So how can we have a system that rewards those who are doing it already? Because at the moment there's a perverse incentive to delay action, which we're not doing. We've mentioned the idea of stacking. It would be good to have questions as well about how do we stack all these benefits, the water benefits, the biodiversity benefits, the carbon benefits. And then also to think who's included and excluded in this. In our work, research with the Prince's Countryside Fund and the Food Farming and Countryside Commission is particularly looking at what scale of farms will this work for, what's the area needed to make it work, and what happens if you're a tenant farmer who owns a lot of these resources and the natural capital in a tenant-landlord relationship.
Brilliant. Thank you very much. Much food for thought. I think, so what we have now is some time for the panelists to speak to each other. So I should be quiet and you should be speaking to each other. But one of the questions that I really want to come back to is this issue of additionality, and how, if we are going to require that the carbon that's sold in these markets is purely additional, and that there isn't a market for maintaining carbon already sequestered, then do we end up in a position where doing the sustainable thing, sequestering carbon, is not a sustainable business model?
Well, and
because once you've sequestered, you're done.
And the government have got previous with this, with high value entry level and higher level stewardship grass schemes. So effectively, once your ELS or HLS scheme had come to the end of 10 years, that grass, rather than being paid at the high value, was suddenly categorized as low input grassland. Yeah. So actually the incentive was suddenly to get a plough, glyphosate out, destroy the whole thing and start again. So I think the fear is a well-founded one, because we have got previous.
Yeah, shall I say something about that? And I think I can completely see why you would be fearful, because when you look at the way that schemes have been designed and managed over the last couple of decades, they're very prescriptive. They do reward establishment and not maintenance, and they're very bureaucratic and they're quite risky. If you do something wrong by an inch, then you can lose 9 years worth of payment. I'm exaggerating, but you can lose a lot of money in penalties. And that's all the stuff that we're trying to fix. And that's when I say we want to get behind farmers instead of getting in the way, that's the sort of thing that we need to fix. So we need to fix our administration, so you can just basically expect us to administer things in a competent and reliable way. And we've made some progress on that, but we've got further to go. But on this question of maintenance, we're designing the new schemes so that we do pay for new habitats and practices to be established, because we need to see an expansion of those things, and to pay for people to adopt innovative practices and to innovate indeed and invent new practices. But we really want to reward those who are the early movers. You're our kind of most important customers, actually, because we need you to maintain those habitats. And actually, from a government perspective, most of the things we pay for are not just for one outcome or another. We tend to choose things to pay for which are good for food production and also good for biodiversity and water quality and carbon. So taking care of your soil, which is where we're starting with the sustainable farming incentive, is a good example of that, and it contributes to multiple outcomes. And so we're actually paying you for the actions, not the outcomes. We have done some trials of payment by results, because on the face of it, it seems quite attractive. If you get better results, you should get more money. But that really does disadvantage early movers. If you've already built up your soil carbon and you haven't got much more further to go, that puts you at a disadvantage. But also, the results you get will vary depending on luck as much as anything else. And it's not. We want people to be able to have some confidence that if they come into a government scheme, they will get paid and not have to worry about us turning up later and going, oh, well, it didn't work, so tough. So in the government schemes, we'll pay you for actions rather than outcomes, but we're paying for actions which, broadly speaking, on average, will have a positive set of outcomes across multiple things. And we will pay you to maintain assets and habitats and features that you've already put in place. And we think that's absolutely critically important. But one other thing to say about that is we have changed the way we work with farmers, and I hope that those of you who have seen us out and about a lot more over the last couple of years will have noticed that we are much more interested now in working with farmers to design these schemes and improve them, not work it out in Whitehall and impose it all on you, because that's how we end up with things that don't work. So in designing all our future standards for the Sustainable Farming Incentive, we have practitioner groups of farmers and other experts who know how to do this stuff, know what's likely to get in the way, know what's likely to help, so that we can not get into that situation again in future of thinking we're the ones who know, when actually you're the ones who know your land and know what's best.
Just to jump in. So it's a problem, right? It's a problem because it doesn't represent a perverse incentive to want to change practices which are most ecologically disruptive from a market perspective. So while it does disadvantage early movers, a lot of the people sat in this room, from an ecological perspective, of course, you want to incentivize people who are doing the things wrong to do the things right at pace, right? And so that does present a problem in terms of additionality. There's no getting around it. I think the way that this has to work is in the detail of things like stacking payments. For me, that is a prime example of something that government should be paying for. Government should be paying for conservation, and they should be paying for maintenance of carbon inland, whereas the markets are probably better positioned to support movement to more sustainable methods. Now, that might change over time. I think the markets will mature and they will begin to recognize actually that keeping carbon in the ground has a price tag on it, but for the moment it's not really where markets are concerned, and I don't think there's really much noodling or getting around that.
I think this whole area of rewarding and maintenance, I think, is a crucial one. And I think it does as well seem to be having the discretion of and the ability of the natural England advisors to have that discretion. And I think, Janet, you've been great at being on Twitter, the Ask Janet sort of thing that goes out on Twitter, where people have done that, and you come back with very clear answers. But we need more that ability of natural England advisors to actually say you can do this differently. And then if the computer says no, that they have a system in place where they can go and say, look, this is a perverse thing going on. Can we change it for this case? But it doesn't need a kind of more natural England advice capacity than there is at the moment.
No, I completely. Can I quickly come back on that?
I'll let Jimmy come in after.
You go.
I was just going to say that we were just having this conversation yesterday, actually. So we've designed the new schemes to be much more flexible. So instead of saying, have a cover crop, use the following seeds, sow it on this particular date, which doesn't actually work for anybody because it's one size fits all, we've said, have a cover crop. It needs to have these characteristics. You decide what the right mix is and how to manage it. But what we have to deal with in that is how are we going to deal with people doing things that we weren't expecting them to do? And innovative practices. And we want to see innovative practices, but we also don't want to pay you to do stuff that's so wacky it's got no chance of success and it's a waste of public money. So we've got to find a way of creating that discretion, exactly as you talk about, that is fair and consistent and encourages people to innovate, and enables people to innovate and gets good value for public money. And that's quite tricky to do that within a flexible scheme. So what we think we need to do is say, look, here's some guidance on the kind of mainstream way of doing this thing. If you want, follow that. If you want to do it a different way, you need to be able to show us that that is a reasonable thing to do, and it's reasonable to expect that to get the results as well. And if you can, great. And we've just been talking about what sort of kind of expert panel or something like that might we set up to help us with that, so that we can keep moving with the times, because otherwise scheme design is like 10 years behind the most innovative practice, because we're waiting for some people to do it, some more people to do it, for it to be researched, and then we put it in schemes, and we're always miles behind, and we don't want to do that. So we want the flexibility. We want you to be able to get the advice to support that flexibility and to be able to rely on that as fair, consistent, and useful. And we want you, the farmers, to be able to decide how do I make, what's my business model? How do I put all this stuff together to make a business that I want in my farm and that suits my setting? And like I said earlier, we want to help you with that and not get in the way.
Just very briefly, but Janet, firstly, I'd say there's nothing too wacky in regen farming. Simply doesn't exist. I think the main problem with all of this, the whole model, is that this stuff is really, really difficult to calculate.
Yeah.
And, we are, I'm assuming, and Rueben, I'm sure, will tell me, but the final trade is a ton of carbon, which I think is 85 euros today. So how is what I'm doing I'm a numbers-driven business, whether it's soil test results, whether it's yield monitors. My whole business is numbers-driven. So how do we get those quantifiable numbers that actually make the whole thing really mean something? And I understand the government position of, yes, we're going to pay for practice, which I think is great. And that feels a little bit like a financial bond. It feels like, in terms of investments, a government bond. Yeah. And this very much feels like stocks and shares. And, if we're looking at topping up with the stocks and shares model, it's how we're not going to end up horribly on the wrong side.
Yes. Yeah. Okay. I probably talk in finance, and it sounds like stocks and shares, and I should be wearing a pair of braces. But I think that the way that this has to work, right, is starts from the ground. If you are being asked, it's only, in my opinion, to tick boxes and to report on crop histories, and then you're being told that someone with a satellite will be able to monitor everything you're doing on the farm. Somebody is telling you porkies, I'm afraid. So where do you start? You have to start with, in my opinion, a pretty experimentally valid setup, and that requires soil sampling. It tends to require it in a certain way that I'm not going to set out because I'm not going to give the crown jewels away on the stage. But I really do encourage you to use your common sense, because actually these things are measurable. The cost of that measurement is coming down. So we do have the introduction of new technologies. eDNA was mentioned before, but also spectroscopy, not actually in-field spectroscopy. That's a little bit of a myth at the moment too, but there are powerful ways of deploying spectroscopy. And so is it perfect? No, it's not perfect. But the way that you deal with that from a market's perspective is you introduce a good buffer. So you say, we are only going to present X amount of what we think we have to the market, and that should satisfy. And then the final thing I'll say on this, which is a really important and valid concern, sorry to remembered it and schismed into action, look, the contract that you sign should not expose you to having produced too much carbon. So too little carbon, rather. So nobody should come back to you or be able to come back to you and say, I'm sorry, by our calculation, you just didn't sequester enough carbon and you owe somebody some money. This doesn't have to work that way, and it's not how this should work when done properly. So I hope that goes some way to kind of beginning to answer some of those questions.
Wonderful, thank you. We could go on and on with this for ages, and I have questions of my own I would like to ask, but we have a wonderful audience, and my experience in Groundswell audiences is they have better questions than I do, and I'm happy not to be the one answering them. So we have about 20 minutes for audience questions and comments, questions preferable. We have Sam. Sam, if you could wave your hand. Sam is going to go around the room. He has the mic. We really would appreciate it if when you have a question, Sam, you could speak into the mic so that it can be picked up for the audio recording for the video as well.
Hi there. Just say thank you. It's been really interesting listening to you, so thank you for coming to talk. We've come from the Netherlands and we work for an agricultural bank, and we are operating in a lot of the things you're talking about. But part of the conversation which hasn't been had here is at the end of the supply chain, and we're finding that when we're talking about insetting or offsetting, but mainly insetting, we're finding resistance in the supply chain because they don't want to inflate the commodity price to the consumer. And they're also, to take Fergus' example with Jordan's here, being paid for a better crop or growing in a certain way, don't want to pay twice. So there's this faltering in the supply chain where they don't feel like they should be the ones paying, and the consumers aren't going to be aware that they're going to have to pay the brunt of this. And I'm just interested to hear the panelists' thought on this.
So briefly, exactly right. So I think that a platform like ours, and I'm not here to advertise, should be agnostic about where you sell your carbon benefits, right? So farmers have to develop their own business cases, and they have to take control of these assets, and they have to deploy them either down supply chains if the deal is a good one, or into offset markets, or not at all if they so choose for whatever reservations they have. But that's absolutely right, especially in a time of the importance of food security and people living closer to the breadline. In our recession, it's clear that supermarkets have pulled back from really wanting to offer carbon neutral or carbon efficient goods at the same quantities. And so, I think it's just probably the case that you're likely to get a worse deal looking down your supply chain than you are into offset markets at the moment. But that might change.
Wonderful. you want to come in on this one? And can the mic come? Or
I was going to come in briefly on this one, if I may, just to say that I think this speaks to a wider set of issues in how the whole market for agricultural produce works and how the supply chain works. And it brings to mind the work that we're doing in DEFRA on supply chain fairness. Because if in general farmers are price takers and requirement takers, and they're the ones who have to take the risk and bear the cost of meeting all those requirements, I can see why farmers might think, well, probably this market will develop in that same way. And so the work that we're doing, another team out in DEFRA is doing on making sure that there is fairness in the supply chain in general for farmers, I think is relevant here. And I also think there's a kind of tricky question about the role for government, because you might say, well, there's a value action gap where consumers say, I want my food to be produced in a carbon friendly way. They all say that. And then if you ask them to keep their hands up to say, are you prepared to pay a premium for that? No, they're not, in fact, when they go to the supermarket till. And often government is seen as the kind of answer to that. Government should step in and fill that gap. But for as long as government steps in and fills that gap, it props up the ability of the market not to. And so there's a much wider set of questions about how does this supply chain work actually, and how do you just get it to be more fair so that more of the cost of production is passed on to farmers, including the cost of production of the carbon outputs that you're now being asked to do. But also then for you, is there some other way, if you don't get all the costs through that route, like Rueben says, is there some other way of you making up that cost through these private investments? Part of this problem here, though, is this is fiendishly complicated, right? You're trying to run a business and you're looking at multiple sources of funding, multiple different requirements, multiple different people trying to take money off you and make you do stuff. So one of the things we've been testing is there a place for some kind of platform where you can see all the funding opportunities in one place? We think there probably is, but we don't think it's for government to build it. We think the market will probably take care of that. But also, we've been doing some work to try and align with some of the existing standards so that what we're asking for in our schemes is well aligned, and you're not being asked to do a slightly different thing for slightly different purposes, but there is some kind of alignment. But it is, I think, if I were sitting in your shoes right now, I'd be thinking this is fiendishly complicated and risky, isn't it? And what part of what we've got to do in government is try and remove some of that risk by providing clarity and rules of the game.
I think I know you're itching to come in on this, Fergus, but we have a lot of questions. There's a question here, and then we'll take from the woman in the front. We'll take 2 questions and then answer them. So,
I was wanting to ask about regulation. Understand the desire to hold off with regulation, not stifle innovation from the kind of credit generation side of things. But I think that a lot of people are concerned that if you look at something like the Climate Change Committee's carbon budgets, you have a certain amount of terrestrial carbon sequestration that's necessary and only kind of feasible to get us to net zero by 2050, for example. And a lot of the concern at the moment is that if you're selling into a voluntary market, their credits or offsets for business as usual rather than credible emissions reductions plans. And is this something that government would seek to regulate? And if so, what are they waiting for in that regard?
And can we just collect the next question as well, please?
So this is much wider than my brief, is the first thing I should say. DEFRA, I'm not the lead, and DEFRA isn't even the lead on these things, but I will say that that's what we're looking at. Like, where is the role for government to make sure there's clear rules for the game and that it operates fairly? We in DEFRA are looking at that from a carbon market for agriculture perspective. We have to fit into wider government policy and regulation on this stuff, which I don't like to try and answer things which are outside my brief. I have quite a big brief, but I'm not responsible for a whole different department. Sorry.
Carbon accounting, it really is what this was. It's about 2 things. It's about attribution, so it's about who owns the carbon benefit, whether that's government or another actor. I say it starts with the farmer, but it's about carbon accounting. So there's a worry that if you sell your carbon credits, that you somehow won't be able to call on them when it's time for net zero. And I've heard this quite a lot. But the reality about carbon credits is they have a vintage, and they are in year. And carbon accounting happens in year, right? So if I'm carbon neutral or net zero, that means that I am net zero at a certain point in time. And the way that corporates get there is not actually by buying historic credits. Why? Because they're less durable. Why? Because there's less line of sight. And so you might be able to sell historic credits into the marketplace, but you are going to yield a much lower price for them because they're not as valuable the other side in carbon accounting. So I think that is a really, really important thing to bear in mind. The broader question that you ask is about how much of this net zero-ness, if you like, will government want to claim? And I think this is a kind of a higher dimension of the payment stacking conversation.
I think it's an interesting debate we've got here. Sort of farmers asking for more regulation, and DEFRA saying no.
Careful what you wish for.
But maybe it's a question for Rueben, as what regulation do you want to see your industry flourish? And I think the other, also to think through, just to read, maybe while you're thinking of that the issue of these historic credits is something that is quite really important for regenerative farmers as well, because quite a lot of farmers are thinking there isn't a market at the moment, there may be in the future. I am doing regenerative approaches and no-till systems and cover crops. I want to capture some of that benefit now in credits, which I might use for my own, net zero in the future or for selling in the future. So I think that's where people are exploring this idea of getting credits now and not selling them, but holding them. And I think it's an unknown sort of area, but it shouldn't be
I think I'd
discounted.
settle for a little bit less like the Wild West. Is I think where I set the standard to start with.
Okay, we have a question coming from the front, and then I will come to this side of the room. There's a man in a checkered shirt and a woman standing in the glasses. But your question?
Hi, just interested in hearing a bit more about what's going wrong at the moment. What are the pitfalls that you're seeing sort of on the ground?
Is that from a farming perspective? Yeah. So I think one of the things that I'm most anxious about is that with some of the sort of 5-year tick box schemes, I can't remember what I sort of referenced earlier, the issue is that you're projecting how much carbon you are going to be gaining over that period of time. And I'm not sure the human being exists who knows that. So from my perspective, it's really worrying that here we are, right, let's do this deal, and in 4 years' time, and I know Rueben says we shouldn't end up on the wrong side of it, but as we sit here now, we very easily could be. And unless you've got literally permanent grass that you're never going to farm again, well, that is a consistent. But, with my system, we are combining food production, which is the primary role, but we're trying to do that as sustainably as we can. I don't know whether that answers the question or not.
My real concern is the whole greenwash issue, and there are some spurious claims being made, and just how do we make sure that what we're doing in this industry isn't sort of thwarted at an early stage by some really bad practice that's going on now.
Let me speak to Fergus's question, then hopefully come back to this question because it comes up and up and up, and I'll do my best. Absolutely, yes. We should only be selling offsets to corporations who are transparent. I know that you only work with B Corps. I'm not sure that's scalable yet, but we only work with corporations who are aggressively pursuing emission reductions and abatement strategies, and it's only the hard to abate areas of their emission portfolios that we will trade into. Also, just to dispel a bit of a myth, with the exception of oil and gas companies and primary industry companies, most organizations, corporate organizations who are buying or trading in the voluntary carbon markets are also the corporations who are pursuing significant emission reduction strategies. They actually tend to be the good guys. Not always, but they really do in the round tend to be the good guys if they want to achieve net zero. To this question, Jim's question. Luckily, it's kind of not humans making these projections to some extent because they're pretty fallible. So there are two ways. One is you've got to get the right information on the ground. You have to get a solid commitment from farmers. Farmers really have to know the contract they're entering into, and they have to commit to the land management practices that will ensure durability. If they can't commit to those, or if they don't seem flexible in the contract, you shouldn't sign the contract. And then how do you know that you're presenting the right amount of commodities to the market? Well, you make your projection, and then you allow for your mistakes, and you say, I'm only going to sell X percent of those into commodity, into markets or directly into corporates, so that you are protecting yourself, myself as an organization, but also your farmers who shouldn't be exposed to that risk. It should be the organization who are taking that risk. And so that should ease concerns on the ground. And if somebody's offering you a different deal, you shouldn't take it.
Excellent. Thank you very much. We have two questions. I'm going to collect two questions, and then we'll have the answers. So there's the woman here with the microphone, and then you're next.
Fabia Bramowski. I work with the Sustainable Food Trust running the Global Farm Metric. I think we've heard a lot today that we will be heartened by investing back in our farmers, but the responsibility as entrepreneurs in this what appears to be quite a wild west out there in these new markets that we've all got to manage and adopt, I think the role of government is to create some fixed points for us within that. And the work that we're doing and the work that we want to collaborate on with everyone is to create a a global farm metric, we're calling it, but what we're really talking about is as we progress through this, in this unknown territory, as we adopt these new markets and we're supported by government to take different practices, that we are measuring at ground level the impact that we're having, not as a reason to penalise us or even potentially to reward us, but so that we can watch and monitor the changes that are taking place at farm level.
Do we have a question here?
Yes.
Yeah.
Is it possible to do that? Because if we had one set of measures that was then able to be used by the supply chain in order to verify some of the processes, then at least we'd have a starting point on which to build, not a finishing point, but the starting point.
All right, so I think the question is, will there be a standardized set of metrics that can be used in these markets? I hope that's okay as a paraphrase of the question. And can we collect the next question as well?
Thank you. A similar question, but slightly different twist. Is that can we have accreditation of protocols and standards so that people know and trust what they're signing up to? And I was just going to touch on the issue of additionality, particularly landlord-tenant, but we've got a whole mixture of relationships within agriculture, share farming, contract farming, etc. My take on it is that the landlord provides the ingredients for the recipe, and it's the tenant that does the cooking. So, in that sense, they are welcome to a portion of the pie.
Right.
But
I'm definitely partial to pie analogies in economics. I've got a whole book on it. So we've got two questions. Will there be a common standardized set of metrics? And what are we going to do about accreditation schemes so that we can move forward quickly?
I just in terms of sort of, effectively, landmarking where we are. So the interesting dynamic of sort of effectively taking a core sample, 60 centimeters, and saying, right, that is your active carbon measurement. The problem I have is I farm on a glacial valley. So between hedge to hedge, I have got slabs of clay and running sand. So depending on where that particular person is, so if I'm saying I want to maximize my carbon, I'm going to make bloody sure the guy with the probe goes to the slab of clay and keeps well away from the sand. So we can give a number, but even at that level, there's huge variance even within a field from hedge to hedge.
I think it's a very good question. I think on the global farm metrics is a really interesting project. I'd recommend everyone to sort of look at it because it really is bringing together a huge area of sometimes competing organisations to actually work together, and we don't want the competition on this. I think the challenge is having not only the metric but also the approach. So like your example, it's about not just what you measure, it's whether you take 5 or 10 samples across your field in a W-shaped thing, and then do a sort of systematic approach, which hopefully could avoid this sort of accusations and sort of people getting skeptical. The only concern I do have is that innovation comes from creativity, and sometimes the metrics and the approach can actually hinder creativity if it's done in a particular way. So it's getting that right balance and still allowing that flexibility.
Yeah, I think just quickly, I think this is exactly the point, right? So government has to allow, to some extent, for innovation. It cannot, I don't think in the first instance, conform to standards which might actually end up precluding new kinds of innovation because they don't conform to rules which have been set prematurely. And as Jim's question suggests, the science is pretty new, actually. And so you have to do quite a lot of work, and especially on soil texture. So we know that soil texture is one of the biggest predictors of rates of sequestration. So again, if somebody is not really taking into account your soil texture, you probably shouldn't be working with them because they don't really know about how much carbon you can sequester. So that's slightly disparate points. But
yeah, I think I agree with everything that's been said about this. I think it's critical that there are standards. Whether there'll be one single measure, I don't know, but there certainly are going to be standards for how to do the measurement, what sort of things to measure, and some sort of accreditation I would have thought would be reasonable to expect. At the moment, we've been contributing to the development of international standards rather than setting them in government, but this is a very live conversation in government now about how do we go about this? How do we do it in a way that reflects where we are now but doesn't tie us all up for the next 20 years prematurely, but so that we're usefully providing the clarity and the fixed points that you called for, but not providing so many fixed points that we just crowd this all out and kill it off, which is one of the big risks for us, really. We could easily just run this whole thing over, and all that money could just not materialise. And that, for me, that's the biggest risk, actually. That doesn't mean we're fearful of doing anything. It just means we need to be wise about how we do it and responsive to how things change as we go, and not assume that we can set some rules now and everything will stay the same and that's that done and move on to the next thing.
Brilliant. I think we have time for one quick question. So just use this
one. My name is Patrick Vanstein. I participated in one of the Elms landscape recovery trials. My question is whether the panel finds that this whole debate is ruled by fear to try something out. We set up our testing trial with a few billion in the bank, investors and corporate buyers that are willing to load their activity chains or investment chains to buy carbon and biodiversity net gain. And at every step of the way, instead of finding an entrepreneurial market that is kind of willing to try something out, put a willing buyer and a willing supplier together, they shake hands on whatever it is that they find amenable and acceptable. You stumble from hurdle to hurdle, like as if we're looking for the perfect market that will never exist. And that's at regulation level, where we think we can't distinguish between regulation of outcomes versus outputs versus inputs in terms of measurements. Shouldn't it be more an approach of let's shake hands? If there are billions that want to come into this, and there are lots of willing farmers that sit on grade 4 land that can barely scrape a living together, why stand in the way?
Well, very briefly, the other thing, so it is about money and it is about farmers being paid, but it's also about an ecological window. You know, there is a big problem here, and we need to be brave, and we need to take risks in order to begin sequestering carbon, and in order to steward things correctly and more sustainably. So I think that's the other case for being as quick as we are careful.
I've got a slightly different view on this, which is that I don't think it's about fear. I think it's about trust, and I think farmers have got lots of very good reasons not to trust people who come at them saying, "We'll buy this off you, we'll buy that off you," whether that's government or anybody else. And farmers, we've got to respect and understand the fact that farmers are dealing with huge risk as it is, with the weather changing in the way that it is, with economic volatility the way that it is, with removal of basic payments. It's uncertainty and risk in every angle. And I think we've got to understand that and work with it to understand how do we build trust and confidence so that people can be prepared to take those risks. Otherwise, I feel like we're kind of at risk of criticising farmers for not being brave enough. And actually, what we're asking for is not reasonable. What we've got to do is build the foundations on which that bravery can happen. And that's all of us collectively have got to do that. It's not about individual, why aren't you braver than you are now? I think farmers are pretty brave as it is, actually, carrying on trying to farm against all of that uncertainty on every angle in the way that I've just described.
100% agree with that.
And actually, I'd sort of probably take it half a step further on, is that, regen farming, I will always argue, is a faith-based system. There isn't, years and years and years and years of data. It's not like we know what a plough does. So it's already a faith-based system. So you're already facing a lot of uncertainty. We've been doing it for 6 years. I will not definitively tell you that this is absolutely the way we must be farming. I believe it is. The data is trending in that direction. But what I don't want is a room full of people to sell their ploughs, sell their combination drills, all go spectacularly bust in 10 years' time, and find out where I live. So I sort of, yes, I've got real concern about these markets, but that's because to be very frank, I don't want to get screwed over. And that is the fear that absolutely drives it. So, I think there is an element of fear, but it's financially based.
All right, I think.
Cheery note.
Well, yeah, we have 2 minutes, so I want to offer the panel a chance to have final reflections, a final comment, if you want to make it.
So my fear is, are we running out of time as well? And I think procrastination is really dangerous for the whole world. So that's my essential fear, and the fear of my children as well, probably articulated more than I do. But so I think that's where maybe we need to do our bit to push these markets to see if they will work. But others might have other views.
I can't help myself but say this. I'm really sorry, but I've got to sell the government schemes. So in a climate of... I'm sorry, I've got to do it. So in an environment where you have got a lot of uncertainty, what we're offering you through the Sustainable Farming Incentive and other schemes that will come in over the next couple of years is some certainty, flexibility, respect, and fairness, so that you can have some confidence that you're going to be able to get an income for doing the right thing over a period of time. So when you're thinking about the building blocks for your business, the government bond, I think, has got to play a role there. And the thing I'd like you to take away is we are absolutely serious about making this work for you. And I'm very easy to find on the internet. If you don't get a chance to mob me afterwards, then you can find me on Twitter or the Farming Forum if anonymous vitriol is your thing, or you can. That's also fine. I ignore the tone. Listen to the question. Or I'm janet.hughes@defra.gov.uk. I'm dead easy to find, and I always want to know if something's not working for you, if it doesn't look like what I've just promised. I really want to know, because we are fixing things literally day by day based on feedback from farmers. So we are really serious about this. And you can find me dead easy, so get in touch.
Fear. My fear is that the actors that I mentioned before, farmers, government and private sector, pull in different directions. Because I think if they do that, then farmers actually will lose a really significant opportunity. And the terms of these, I said before, the terms of these natural capital commodities will be dictated to them by larger, more powerful actors. So I think it's about speed, and I really think it's about coordination, and I really think it's about government getting this right, and kind of no pressure, and underpinning this market with the right principles at the right time.
I'm going to try and end on a cheery note now. I think the farming practices of regen, sequestering carbon, is incredibly important. I have 3 children; they can't breathe underwater, so the practice itself should be encouraged. I just want to make sure that the model that is there, and the sooner the model that works that goes into place, the better. But it just doesn't feel like the stability is in the market yet.
Wonderful. On this note, we are out of time. I am sorry we did not get to all of your questions. A better chair may have done so. All that's left is for me to say thank you very much on behalf of the panel to you, and for you to join me in thanking the panel.